Welcome to the People, Property, Place podcast with me, your host, Matthew Watts, founder and managing director of Rockborn. This is a podcast where I share the stories, views, opinions, and career journeys of the movers, shakers, innovators, and leaders in the real estate industry. Welcome to the People, Property, Place podcast. Today we're joined by James Farmer, co-founder of Boreal Investment Management. Headquartered in London, Boreal is an opportunity-driven investment manager with a current focus on logistics and light industrial properties across Europe. Set up in 2022, it's led by its founding partners, former Blackstone, TPG and Europa execs, who between them have a joint track record of having deployed more than 3 billion euros of capital across 70 deals in 17 countries since 2013. The team has secured 1 billion euros of equity from Canadian pension giant Cadillac Fairview, who've also taken a stake in Boreal itself. And the plan is to build a 3 billion euro pan-European portfolio. James, welcome to the podcast.
Thanks very much for having me, Matt. Thank you.
Not at all. Well, look, we'll come on to Boreal a little bit later on, but a place I always like to start in these conversations. Can you give me a bit of a brief background on your personal life and story? Can you tell me a little bit how you chose to study geography at uni, and then from that, how you decided to pursue a career in real estate?
Yeah, sure. I mean, it's going back quite a long way now, but I think going into university, I had no real idea at that point of what I wanted to do career-wise, and geography is probably the classic generalist degree where you don't specifically move into any sort of direction from there. So following, getting towards the end of my university course, I was quite lucky to be introduced by a family friend to someone in the real estate industry. I then was offered a chance to do a sort of 6-month internship working in sort of the planning and development department at Chesterton back in the day in Mayfair. So I sort of turned up there, had no idea what I was doing, completely like a fish out of water. But, gradually kind of got used to the environment, really enjoyed the kind of people aspect, the variety of work. And then I had planned always to go traveling as you did back then. I'm not sure if people still do that these days, but I've disappeared around the world for a year to go find myself. Yeah. Basically go diving and muck around for a year, and then came back and sort of Chesterton had at that point, imploded. So I was a little bit stuck, and then I took a role actually in residential leasing. So running a lettings business in Pimlico. I was in contact with the guys at Chesterton who were left, and one of them suggested I sort of get onto the Reading real estate course. So I applied for that and started that in 2004, and so did the MSc conversion, which is the sort of specialist real estate focus crash course in a year, and then went from there into the usual sort of graduate program.
So you did the milk rounds across all the big agency firms and landed at Jones Lang?
Yeah, I mean, it was a bit of a, the milk rounds were a nightmare. I can remember they were probably, that's 17, almost 18 years ago now, and I can still remember it. I probably did. I interviewed pretty much with every consultancy. I was getting rejected left, right, and centre. It was a huge panic. And in the end, JLL were kind enough to take me on in the capital markets team.
So did you go straight into the cap markets team, or was it kind of a rotational program?
Yeah, so I went into the capital markets team doing central London office investment. Really enjoyed my time there. Had began a great variety of work, really good clients, good buildings, incredibly steep learning curve, doing sort of office brokerage side and advisory. But I was kind of quite conscious. I wanted to sort of rotate into certain areas of real estate, and JLL didn't offer that to me at the time. So hence my quick move to CBRE, who offered me a place in the national valuation team.
It's quite an interesting move now, going from investment to vals. I guess most people would want to go the other way around.
Yeah, I wanted to do the whole RICS route. I think achieving that would have probably been okay actually in the capital markets team. At the time, you were kind of fed that you needed to do X, Y, and Z, and I wanted to kind of follow that route. And I wanted to try and do other things as well within the industry, just to kind of try it out, see what it's about, learn. And become probably more well-rounded than just being, an office investment agent. So I took this national valuation job at CBRE, which again was a great learning curve. Did a bit in the sort of L&T part as well, and their whole kind of APC and RICS training at the time at CBRE was fantastic, which is another kind of attractive element to it. So I did that for a couple of years, and this is when the sort of market was starting to bubble, and just before the big crash in GFC, and then I think I was always conscious having done the kind of investment side at JLL and then the valuation side at CBRE, working with some pretty big clients, that I always wanted to go client side. So I think I decided that fairly early on in the sort of career path I'd sort of set out for myself, and then made the really smart move of jumping into RBS just before the Lehman crash.
So you timed the market, saw it coming. You saw it coming from a valuation perspective, marking everything down. I thought, got to get out of this.
Yeah, and I kind of jumped, out of the frying pan into the fire.
Yeah.
RBS was obviously hit quite badly during the GFC. It was a pretty stressful time. I was kind of brought in to, I guess, assist their balance sheet growth, and you kind of pretty quickly learn how things can change overnight in terms of the environment. I mean, this is the time when Lehman Brothers is folding and the world is going to end from a financial perspective, at least. So it was really useful in terms of learning. It was pretty stressful and it was pretty chaotic. So having gone and joined somewhere to go and assist, I guess, with your real estate expertise on the sort of new lending side to major corporates, you were then thrown in to basically come along and renegotiate loans that you just worked on 3 months prior and ask for some money back and all that. So it was pretty harrowing. It was not good environment or good times at that point. I mean, you take a lot of the learning and experience from it, and I'm kind of glad I did it and survived it and rode it out. But every day you were going to the office and expecting a P45 to be put on the desk, and somehow managed to cling on to my job there. And
were they making cuts at the time?
Oh yeah.
And were they keeping you on because you had a good understanding of the investment market, even though you've been doing it for a year, but then kind of a couple of years vals and. Yeah, you weren't too weighty at that time in terms of your comp, and you could process quite a lot of work.
Exactly. I think having the little bit of real estate background helped a lot with the restructuring, because you were given a loan and looking at that, thinking, right, okay, what are we going to do with this? So it was more of a kind of workout role for 18 months of the 2 years or so I was there. So it was a complete shift in terms of job spec and mentality. But you've got to kind of roll your sleeves up, especially in that sort of environment, and get on with it.
And were you working with also had quite a big receivership team or built that? Were you working with some of the kind of the larger consultancies, receivership teams, or?
Not so much. I was working more on the kind of client-facing role with some of the mid-cap and major corporates who had lots of loans with RBS and trying to work out what the way forward was going to be.
Yeah. And LTVs at that time?
Oh, I mean, to be honest, RBS were not quite as bad, but I mean, it depends what the V would have been. But yes, most things were in a pretty stressed place. I mean, bearing in mind they were lending, 80% plus at that point. Yeah. And some of the Irish banks were going over 100% at that point. So it was a very, very different point in the cycle, which luckily has not ever come back.
So has that experience, or what have you learned from that experience that you've carried forward to your kind of wider career? Because that's 3 years in, you've been kind of thrown into the fire pit there in quite a stressful, chaotic environment.
Yeah. I mean, look, you've got to try and take whichever role you're in, you've got to kind of look at it in a sort of positive mentality as much as you can, and trying to learn as much as you can, and take what you can from it. So here, I think, is a real valuable lesson for me in terms of risk. And when I say that, I mean in terms of allowing debt into the structure. Unlevered versus levered is a very different level of risk. And I think you become quite aware that, the covenants and detail within your loan docs can protect you to a certain element there. So there's a real, that's a real strong takeaway, I think, which I sort of carried with me through the rest of the career that I've had so far. So that's a big one. I think being resilient, trying to kind of focus on your, yourself, and focus on your role, and, keeping your performance at a level despite all the, the turbulence that's going on at that point. Again, sort of just approaching it in a sort of determined mentality.
So how were you there for a couple of years and then you left to go and join Europa? How did that come about, and what was the reason behind at that time?
I mean, look, things started to, I wouldn't say stabilize, but settle down to a point where pricing was getting so ridiculously attractive, and we were getting approached by a lot of our clients to go and buy, for example, city offices at 13% yield, and sort of fully let retail warehouses at 10%, leased to sort of B&Q and M&S and all that. And we were getting so much of this stock thrown at us I was thinking, right, values are really only going to go one way from here. Once things stabilize, maybe this is probably the good time to get into the sort of equity side and try and capture some of that upside, which is going to come at some point. So, I was kind of sitting there looking at all these projects and decided I wanted to try and get into one of the PE shops who have been probably best positioned to capitalize on the distress. And obviously having a bit of knowledge on the debt structures and how to unlock, there's a bit of an obvious synergy there, I think. And look, I got quite lucky. I heard that Europa were looking for someone. The role at that point was non-UK. And bearing in mind my, sort of 4 years or so of experience had been very much kind of either sort of London or Southeast centric. But Europa were at the time, they were a pretty small shop, not too dissimilar to Boreal in terms of personnel. They were kind of just under 20. They were looking for a kind of associate to work with a chap named Nick Fox. And I was, actually know Nick a lot. He kind of gave me a chance, took me on as an associate, despite the fact I knew nothing about Germany, knew nothing about how the lease structures there worked. I just kind of said, look, I want to come in, I'll learn, work hard for you. And that was it. That was the, he kind of gave me the chance and I never looked back, luckily.
So he was a partner, was he?
He was, yeah. So he was formerly Westbrook, and he'd been at Europa for a few years and I was looking for someone who was, I guess, financially capable to assist him. He was doing a lot of the sort of sourcing and execution in Germany, and he wanted someone to kind of come in and help on the execution side as well as the sort of financial modeling and everything else, which was a big step up from, what we were doing at RBS.
At the time, was there a lag in terms of the market across Europe?
Yeah, for sure. And look, coming from people are probably, sick of people our age talking about GFC or when I was in the GFC, but it took a long time to unlock. There was a lag, and it probably wasn't really until sort of, 2014, 15, 16 that debt started to kind of flow properly and freely again. To get back to pricing where it was, March last year. So yeah, there was definitely a bit of a lag. But that was in I moved in 2010, and the role evolved over time at Europa. Back then, it was buying stuff cheaply with equity, or taking on underwater loans and doing kind of sort of NPL or restructure workout, providing pref equity to developers who undercapitalized. So it was a slightly different mentality, and the market obviously moved over time, but it was a very different role to my RBS shop.
And were you kind of working across all the asset classes there?
Yes.
Or were you kind of quite siloed and quite focused on a particular?
Yeah, I mean, the good thing about working at Europa is you had exposure to, it was multi-sector. The fund at the time, which was Fund 3, was a multi-sector fund, investing in offices, retail and industrial in UK and Europe. My specific geography was Germany at the time. My German is terrible, by the way. It still is not great. I could just about get around, but I think the attractiveness there was you got to do with multi-sector. It was quite interesting on the I guess on the sort of distress side and unlocking distress with your equity, and getting the exposure to multi-sector was a good learning. I guess a good learning.
And were the business plans typically 3 to 5 years at that time as well?
Yeah, I mean, look, the fund was a value add fund. So exactly, it was a classic kind of value add, 3 to 5 years, buy, fix, sell.
Yeah. And so you joined Mr. Fox, and then you ended up staying at Europa for 11 and a half years, working your way up to partner. Can you just give me a bit of insight in terms of your kind of career journey at Europa and how that came around and some of the deals that you worked across?
Yeah, of course. I mean, I think making the transition from banking into the sort of private equity side, I mean, you've got a lot of transferable skills. I think what I did is really kind of focused on the Excel modeling. I think Nick was saying when I joined back then, he was interviewing multiple people, but they would just fail the Excel modeling test. It's a really simple skill that you can give yourself. And I did all of that actually in my spare time. Outside the sort of RBS 9 to 5. So I think, that in terms of advice, if you want to get into one of the PE shops as an analyst or junior, that's definitely something to brush up on.
How did you know that was a skill that you needed to kind of perfect?
I think speaking to people in the industry, I saying, look, I'm interviewing here, or other people I know who are in similar shops. What do I need to do?
Yeah.
First thing they would say is, do not fail the Excel test, because you're going to get an Excel test. You'll be amazed at how many smart people come in, think they can build a basic model and can't.
Yeah.
Or just can't do it in the time or freeze. So I just practice it so I could pretty much do it in my sleep at that point.
And I guess because of the GFC, there's probably far more scrutiny and much more of a need for that skill set at that time.
I think so. Yeah, and especially being able to build bespoke models, because the old clunky plug and play models didn't quite capture a lot of the complex structures that were sort of needed to be modeled out at the time. So yes.
So you kind of your core skill set from an Excel and modeling perspective that carried you through your time at Europa, or you were able to draw or build on that skill set as a base. And
I think there's two things. I mean, the one thing is being able to manipulate cash flows, and the other thing is being able to understand the outputs and the relevance of the outputs. And one of the things that you, I guess, going forward in your career is really the sort of deep understanding of the sort of major drivers and swings in your cash flow. What are the main levers to pull, and also how you're able to kind of extrapolate the outputs and articulate them internally and externally. So, but look, I mean, Europa was a very numbers-driven organization, so you had to have a strong understanding of the numbers in detail. But of course, as you sort of step up in your career and transition from, I guess, a kind of associate role, which is quasi-analyst, which is basically you're in charge of the numbers and the due diligence, is, sort of stepping away from that a little bit and moving towards more of a kind of transactional role with the sort of natural path within a shop like that, which is really starting to own more of the DD and the transactional contracts and documentation. And then, of course, as you kind of transition to more senior, it's far more the sort of transactions and acquisitions are not really your sort of day job so much. It's far more relationship driven. It's far more relationship driven internally and externally, actually, for that matter. Far more business operations that you get involved in, and especially in I guess outfits like Europa, it's more on the cap raise side. You do a lot more on the sort of HR, recruitment, and sort of tactical thinking. So.
Yeah, and your role would have evolved out of Germany as well. Can you give me a bit of a picture in terms of, obviously, you told me it covers ops and HR and cap raising. Again, you're working across multiple different geographies, different asset classes, being pretty flexible depending on where the market or the opportunity presented itself.
Yeah, I mean, Europa kind of changed as Europa grew. I mean, it went from 20 to 60 people, so it kind of changed a bit, and you got moved around in terms of geographies depending where the need was. So I did, a few years in Germany, 6 months dumped in Paris with my even worse French than Trin. But managed to put off a great deal there, and I then moved to work with Robert Martin in Central Europe, which was great fun. Again, huge learning curve. I mean, I learned a lot from Robert and his way of thinking, and that's again a very, very challenging market. But then it was they were talking probably 2014ish. Quite an immature market. It's changed a lot, but it was a little bit like a bit like the Wild West back then.
Yeah,
there were only really a few op funds. I think there were kind of Europa, Tristan, BX were kind of out there doing some bits and pieces, but there weren't many. And I think, being, looking back on that experience is very, very valuable. Again, you're sort of doing complex transactions, different markets, different ways of, thinking through things, different ways of operating, different sectors. And you're kind of learning all the time, which is something that really kind of interests me and I liked about that.
And is that why you stayed for 11 and a half years? Because no doubt you'd have been on quite a few headhunters' lists, trying to prize you out of that business, but you stayed there for a long time.
And do you know what I mean? For most of the time there, I enjoyed it because for exactly that. It was varied, it was challenging, it was a great shop. There were good people. A lot of the kind of culture eventually got eroded. Sort of slowly over time. And actually towards the last few years, I was actually working on the Core Plus vehicle with Andy Watson, who again, I learned a lot from. He's a great guy. And building that up with Europa's sponsor, which was Mitsubishi, actually majority owner, and working with them as well, which is great. But it was, I think I got to the point towards the end where I wanted to try and challenge myself. I wanted to try and do something a bit different. I was kind of, I wouldn't say not motivated, but I was just starting to sense that I was running out of motivation. Didn't quite have the kind of level of get up and go that I normally would do. I'm a pretty driven character. So I kind of just made the conscious decision to start looking around, either doing something on my own or joining somewhere that was entrepreneurial and new, and taking a little bit of a risk on it.
And was that partly induced by COVID, or in these vehicles you get promote and carry and payouts and everything else that comes in, it's carrots that keeps people. Was that a factor?
Yeah, I mean that was a factor. I think there's two things. COVID probably was a factor. I think COVID was a a good time to sort of sit back and reflect on, I guess, the sort of path that you're on in terms of your career. There's a lot of time at home, a lot of time on Zoom and Teams, and it was, a lot of time where you weren't, sort of rushing around at London. So there was probably a bit more thinking time and a bit of that. And to be honest, I always had a kind of desire, I guess, to try and do something and set up something myself, or at least with others in a more entrepreneurial environment. And in terms of, the promotion of thing, yeah, that's always a kind of the golden kind of handcuffs, but, I wouldn't quite describe it as golden, but it was, is definitely a factor.
And in terms of that entrepreneurial journey, how did you come to meeting Louis, Simon and Peter and forming Boreal, or the idea, or the relationship or friendship with them before that even came to play?
Do you know what? I mean, nothing more than a kind of stroke of luck, actually. So I was talking to someone who was looking for funding for some logistics developer. He was pretty well linked in with the logistics market. I did a little bit of placing people there as well on the side. And I just said to him, look, I'm out talking to a few parties. I want to try and do something a bit more entrepreneurial. If you hear of anything, just let me know. And a week later, he said, text Louis, there's his number, good luck. And I met Louis for a beer in a grotty old pub in Soho, immediately got on well. I mean, he had exited TPG, was looking to set up something on his own. So he had sketched out the whole idea with Pete. And, bearing in mind, Pete and Nikos, the fourth partner, Nikos was at Columbia Business School with Louis. So knew Louis really well. Pete was at the BX office platform, Revantage. So obviously knew Louis from those days. I was kind of the sort of fourth partner, really. And, that was, so nothing more than a kind of stroke of luck. And then we're going through the business plan, what we want to do. And there was obvious synergies. I mean, Nikos is really strong in sort of Southern Europe, sort of Spain and Italy. I was, much stronger, I guess, in kind of UK and Northern Europe. So there's an obvious synergy there in terms of acquisitions, contacts, and sourcing. Pete looks after a lot of our kind of financial operations. So he's kind of CFO and asset management and financing. He's a bit of a sort of CFO plus, and Louis kind of oversees the platform as CEO. So there's a really good synergy in terms of, I guess, skill set.
Yeah.
And I think also in terms of personality, which is just as, if more important.
Yeah, massively so. I guess the other piece is the equity, right? How it's great having a team together with an idea, but pulling that all together and leaving pretty high profile jobs to kind of form a unit when there's a lot of money chasing logistics at that time, and there's a lot of new businesses that had set up. How do you go about taking that idea from that pub in Soho? Appreciate Louis probably done a lot of the hard work, and there's certainly some refining that went into it. But how do you take that and go and raise the capital while trying to do your day job at the same time?
Yeah, I mean, look, that was probably the biggest challenge, just getting it going off the ground. And again, we sort of run into, I guess, some sort of luck and timing here. At the time, logistics was a really hot sector. As you said, there was a lot of capital looking to get into logistics. There weren't that many available logistics managers who weren't already part or majority owned by the equity already. So we kind of spotted a gap in the market. The initial idea was to do more of a kind of fund management setup, to start smaller, to go out and raise, a modest amount of equity, build some track record, and go from there. So probably follow a more, I wouldn't say traditional path, but that's typically how you would approach it.
Yeah,
and just take a bit of a risk in terms of your career. I mean, obviously, it's a bit of a jump going from a very, very comfortable, fairly well paid job to basically having nothing. But at some point, if you want to challenge yourself, you've got to take a bit of a punt. And we got to the point actually in the autumn where we decided to go down a kind of different path. I mean, the whole investment management world is changing. I think a lot of the LPs are far more educated these days. And we the second option on the plate is to become a kind of sector specialist with a sort of larger LP. And that seems to be where the kind of market is moving away from the kind of commingled sort of fund world to this sort of sort of single track sector specialist outfit, which is there's been a lot of new startups in that sort of zone. So, and some of them have been super successful, like Firewall, for example, and Mirastar to an extent. So we kind of went down that avenue. At the same time, we very luckily got wind that Cadillac Fairview, who are part of Ontario Teachers Pension Plan, were looking for an industrial partner, and we met with Jenny Hammerland, who's head of Cadillac. And just to sort of fill in the puzzle, Jenny was also at Columbia Business School with Louis and Nikos, which probably helped a bit. But that was sort of the sort of final piece of the jigsaw. And we we spent a month or so looking at and negotiating heads of terms, and things really accelerated quite quickly. So this is the back end of October 21. I resigned from Europa at the end of December, just before Christmas actually, in 2021. Alongside Pete, he went the same day at Blackstone. And then we signed terms with Cadillac formally around the 20th of February, I believe, in 2022. So there was a sort of 2-month period where we were sitting in WeWork, sort of sipping our frappuccinos with our sort of skinny jeans and
trying to fit in
and failing miserably. Far too old for that. But at that point we didn't have, we had obviously a lot of legal bills. We had obviously great feeling that Cadillac were going to do it, but there was a risk there.
Massive risk leaving with it on a word.
Yeah, but there was at the same time we spent a lot of time with Cadillac. There's also the relationship with Jenny we trusted. But and also it's a big step for a pension fund to basically provide some VC funding to get into logistics. So it's a pretty amazing creative step from them. So and I think we obviously appreciate that. But yeah, look, it was a bit of a risk. It could have gone wrong. But I kind of figured, what, I've been at Europa for the coming 12 years. My motivation levels, were sort of changed a little bit, and I wanted to try and challenge myself. And I kind of figured, what, if it all goes wrong, maybe I'll go and do something else, and I'll back myself to get another job elsewhere.
And had you given yourself like a period of 12 months or 6 months or something to find that? Or
yeah, I kind of figured that what, if the market was still pretty strong, it was very strong actually in Q1 22. If this all went wrong, I would probably be knocking on your door and others, and I'm pretty sure I'd back myself to get an acquisition role in another shop. So I wasn't too stressed about that.
So Cadillac, as you mentioned, kind of taking a piece in the top co as well. I guess from your perspective, the benefit from that is there's alignment, there's commitment. You're not having to go and raise money on a deal by deal basis. You've probably got a much larger sum or firepower behind you to go to the market. Do you think that was essential to be able to really have a dent in the market at the time and really launch yourself and build the team and everything else that comes with setting up a new shop?
Yeah, it's a really good question. So I think yes. I mean, would we have been able to? We've grown from 0 to basically almost 20 staff now in the space of 10 months. And we wouldn't have been able to do that without, I guess, some of the funding from Cadillac initially, which has enabled us to hire really high quality people into the team. I mean, people are, yes, they're aware they're joining a startup, but at least we can look them in the eye and say, your job is, okay for a while. Even if we don't make any AUM, we can pay you for the next year or so.
Yeah.
So naturally, people joining us were probably a little bit more creative and risk takers than others, but I think all of them are going to come from either personal relationships. I mean, Will and Humphrey joined me from Europa. And then obviously, Emma was at Logical and I went to BlackRock. Obviously, so she does a synergy there.
But Mark, people from Mark or Mayor Bergman?
Yeah, so we've got Annika came from Mayor Bergman. Mark as our sort of head of impact and investor relations. Then and the theme kind of throughout the company kind of rolls consistent. I mean, most people were or are kind of known to us. So there's a kind of personal thing there. We kind of generally drag most people out for a coffee or beer and say how coming on. Yeah. And actually, people were surprised at just how enthusiastic most of the responses were. I mean, some people want to just go to Goldman or to BX and want that big name, but a lot of people we spoke to, I think, recognized the opportunity, and that was, I guess, much more prevalent with the scale and quality of partner that we had secured. I think if we'd secured a small amount of money and a sort of unknown partner, I think we would have struggled to hire the quality of people that we did. But having Ontario Teachers Pension Plan money and Cadillac Fairview behind you and backing you with capital to start you up is a strong message. Having €1 billion equity commitment is an incredible, I guess, vote of confidence in the partners to build a business sensibly alongside you and invest in a good way alongside you. So I think in terms of the pieces of the jigsaw, there were some really strong foundations that we were able to build from, and that's really enabled us to get to where we are today and achieve all that we've done today. And we certainly couldn't have done it, if you're doing this on your own, it's been a lot of heavy lifting, and we've had to divide and conquer between the partners. I mean, when you look back in the year, we've done much more than we ever dreamed or thought possible. But we pushed ourselves on.
I can only imagine. So can you talk to me about your first deal, and then maybe give me a bit of an overview of current assets under management at the moment?
Yeah, so unofficial. So basically, in January, we were sitting in a WeWork basement in Hatton Garden. The JV was kind of getting negotiated and signed. We somehow managed to secure a project called Project Sophia, which is a 100,000 square meters warehouse estate in the Port of Rotterdam, which is bizarre because there were 18 bids, and somehow we managed to get in there as top bidders.
And unknown, unfunded at that time.
Unknown, unfunded, but obviously Cadillac kind of there and kindly kind of assisted us on the calls with the seller. But we beat a lot of very well known big logistics names in that, and that was a real kind of shot in the arm for us. And it took us, the deal took 4 months to close, and it was the seller was very slow moving and difficult. We bought from KBC Bank in Belgium, so buy from Belgian bankers. They were a very different mentality and way of thinking, but they were, very, very cautious over who they selected. So, and I think the, having the sort of OTPP name behind us really enabled us to sort of present ourselves as a kind of core friendly kind of buyer and not a kind of sort of levered off fund aggressive, sort of price chipping kind of mentality. So that really got us traction and a bit of respect in the market because everyone kind of, cottoned on the fact that we were there. That enabled us to then secure a deal in Park Royal, which we bought from Aberdeen. So that together with our Park Royal deal was plus minus about 250 million euros of equity. So as a startup, that was a pretty significant statement, I guess.
Yeah, and gearing wise, as I read in the press, targeting 60 to 65% gearing. Are you buying an equity and then refinancing it later, or?
Yeah, absolutely. That's very much the strategy, and I think we're quite lucky because the money that we have is I would term core plus. So we're not so sensitive in being able to do that. And I think a lot of the struggles and I guess opportunity for us today is a lot of the kind of US debt-backed PE funds are sort of out of the market at the moment because their whole model doesn't work. Yeah, they're not getting the 70-75% loan to value. They're not getting the cheap margins or the cheap bonds that they were using to sort of jack up their returns. We don't need that, which is great, and it gives us a big leg up on other buyers in the market when we come across them. So we've got flexible capital, sensibly priced, given the kind of risks that we are taking on, and absolutely that's the strategy. We buy equity. We want to be known as a reliable buyer in the market always. So we close cash and then we will wash up the financing a bit later down the line.
And you can buy standing, existing income producing assets through to riskier, more development and opportunities.
Yeah, I mean, we've got, look, we obviously work closely with Cadillac on the strategy and what risks they're comfortable taking and what risks they aren't. And that their mentality actually is one of a developer. I mean, they've done a lot of development as a house, so they're not scared of development. We've pivoted far more towards the income side of things, given where the markets moved to recently. But yeah, I mean, we've got flexibility, which is good and hopefully attractive for our people who've joined us. They can work on kind of different risk profiles within the logistics sector.
So at the moment, you've got 250 million under management, or they're the first two deals?
No, they're the first two deals. So we've done quite a lot more from there. So look, generally as a house, we targeted short duration income in severely supply constrained markets. And I'm kind of glad we did that given the sort of massive shift in the sort of capital market environment. I'm glad we didn't go on this sort of 10 years sort of Amazon bonds with capped RPI or whatever. So really we've kind of, our strategy sort of still stands today and has enabled us to continue buying even throughout the turbulence. So we've got around 700 million now AUM in terms of gross asset value. That is split between the UK. So we own an estate in Park Royal. We own an estate in Dagenham, both of which we bought from Aberdeen. We own a large warehouse in Wolverhampton, the Midlands, something in the Milton Keynes area, and we've also got around 240,000 square meters in Netherlands, split into around 16 buildings. So you've obviously got the Rotterdam asset, which is probably about half of that, and the rest of it is kind of in this sort of small to mid box sector dotted around all the usual places in the in Netherlands. And we've got a small asset just north of Barcelona And we did something as well just before Christmas in Paris, just the north of Paris, which is not out at the time of recording this in the press, but will be, I guess, by the time this podcast comes out. So, the platform's expanding. We've got a small office now in Paris as well.
Okay.
With our asset management team and acquisition team there. And we're also setting up a office in Amsterdam as well. We just hired someone in. People at the time of putting this podcast out will also have, will be out there as well. He's joined us from another big logistics platform to directly manage our assets out there. So we'll continue to expand throughout Europe. So we've done 700 million this year. We think this year offers incredible buying opportunity. I think, 2023, yes, there's still lots of macro headwinds, but should be a good vintage. And we're very confident about the outlook, medium to long term for logistics. So we will continue, I guess, along the same path. We'll continue to spot for signs of, opportunity and weakness and pivot and adjust as we wish. And, this year will be probably about expanding our geographies within our portfolio. We'll continue building in Spain. We've made a start. We'll continue going in France. Really difficult market to penetrate, but having the office there and having a couple of people there, fighting for us locally is super valuable. We are looking very, very closely at Germany as well. So people can expect to see us far more active in that market. So look, we'll continue to build out with kind of like the sort of pan-European logistics portfolio, and that's very much going to focus for this year. So having gone through all of the I guess business build out and all the stuff that kind of goes behind that, we can kind of focus now on investing in our sort of sector and managing them well.
Yeah, well, from a timing perspective, it seems like you couldn't have timed it any better. No legacy assets or kind of issues. You're striking with a hell of a lot of firepower at a time in the market where there has been a bit of turbulence, but you've been able to kind of capture that perfectly almost.
Yeah, I mean, you're right. I mean, we did time it really well. We're super, super fortunate, actually. I mean, if we started Boreal in 2020 and deployed a billion between 2020 and 2021, it probably wouldn't be looking so good. So the market did shift, is changed absolutely in our favor and for the favor of investors with dry powder now. And you touched on legacy, and I think that is really important as a business. We have no legacy issues which suck up lots of emotional energy and lots of your team's resource to deal with it. So we don't have any of that. We can kind of focus now, having built out the bulk of the team. We can really focus now on what we do next, what is the right move, how we invest the balance of the capital that we have in an intelligent and the right way, and really focus on how we manage it to the best of our ability as well, and really try to sort of prove our track record as a new investment manager. So
if you come across a deal that you think is a great deal that Cadillac don't like, is there an ability to go to other equity partners, or there's just no need?
No need. I mean, look, Cadillac have been fantastic in terms of following us. So very rarely do they ever say we don't like it. And bearing in mind, they have a team in London who we sit and talk to all the time, and looking at any joint venture communication for sure is key. And we have, regular touch points with Cadillac all the time. So whenever they get anything, it's not going to be a shock. They're not suddenly going to get a deal in some crazy market that they've never heard of before, at some crazy price. Everything's always been talked through whenever we bring them anything. So I think the question is more how you handle your relationship. So nothing is a shock when you get it. And in terms, so we have absolutely no ability or need to go elsewhere. If we have a logistics deal that Cadillac don't like, we'll just move on and find one that they do like at the moment. So
yeah, no, that sounds great. For 2023, can you just run me through what the plan is for this year from a growth? You've touched on it in terms of a couple of different European offices and build outs, but is it just more of the same, finding better deals and deploying more capital and building the business further?
Yeah, I think so. I mean, last year was a combination of, at times probably quite chaotic combination of building out AUM in a considered way as possible, but as fast a way as possible, because the market was moving in our favor, specifically in UK in Q4. There was a real drive to deploy. At the same time, we were backfilling and setting up a lot of the kind of corporate bits and pieces that go behind, sort of operating and running a business that many people don't see. And there's a lot of energy and time and effort that went into all of that stuff, like mobile phone contracts, computers, IT, leasing an office, all that sort of stuff, HR policies, everything. So all of that's now kind of is set up. So that really allows us to focus this year on, as I kind of said earlier, what is the right next move. We've done a lot of analysis in terms of, because we're a lot freer to focus now on investing, where is the macro pushing us? whereas the micro pushy is what is the sort of right route now for logistics in terms of our next step. Which countries do we really want to target? Where do we focus our sort of time and energy? Do we do last mile? Do we do big box? So we can kind of drill into a lot of the kind of analysis now, free of a lot of the kind of the business build out that was sort of on us last year, certainly as a kind of partnership. And in terms of where we go this year, I think it's very much kind of more of the same. I mean, look, it's a single mandate with Cadillac in terms of it is logistics. It is targeting markets which are the key European geographies. It won't surprise everyone. It's UK, Germany, France, Netherlands. We'll look at Spain, Italy, and Poland perhaps at some point. So everyone knows the geographies. Everyone knows the sectors. We're actively now just looking at how best to access opportunities and where we go next.
What data do you look at when making investment decisions? Because from my very limited understanding, it's you don't just look at just the yield or the rent and the price and that. It's shifted in the last 5, 6, 7 years, and there's so much more data and analytics that you look at before you even kind of look at a property first up. Am I right with that? And what kind of data do you look at?
I mean, starting from the kind of top down, I mean, we do a lot of macro thought, and between us, there's a really good degree of experience and knowledge there. So we use a lot of we're signed up to some of the investment banks platforms who provide us with data. So we get data from them. We signed up to Green Street. So Green Street provide us with a lot of the kind of creative thinking and macro thinking, and trying to link that to real estate. So that's a kind of good synergy between the good link between the sort of pure macro and then the sort of macro plus real estate. We've got a lot of kind of data and comp platforms that we use. We use Coyote as well, which is quite useful. So all of our kind of comp data goes in there. So look, we do a bit of both, and there's also the traditional stuff like CBRE UX we use. That's a really good data point for sort of tracking back past rents and yields. Yeah, and also a lot of the kind of traditional sort of property level metrics as well. So it's a knitting together in terms of macro fundamentals and how does a micro fit, and then looking at how the asset fits within that as well, right? So yeah.
What are the qualities that you look for when you've assembled your team, when you've hired? I know a lot of them you've known or they've been known entities, but what are the traits that you're drawn to and as a business that you gravitate to? I'm just keen just to give people a bit of an insight into like the culture, but also what they need if they want to succeed in a kind of real estate private equity investment management environment.
Yeah, I mean, it's again, it's kind of been interesting looking back at the culture now. Maybe we come on to that, but in terms of who we hire, yes, we sort of really kind of sort of push people who were well known to us to come in, and in terms of qualities, I think I mean, look, we're a small team, and if you're a small team and a growing team, it's naturally quite a stressful environment. So you need people who can, a really high quality. You can give them work, and they would just get on with it. People who want to kind of help build a business. So I guess probably have naturally been a little bit, maybe sort of either underwhelmed or bored in a sort of larger shop and want to kind of take a bit of a risk and be creative. But I think people who want to come in and work as part of a team, no sort of major sort of egos or any nastiness or any of that, who probably weren't fulfilled in that sort of corporate, slow moving environment, who want to go somewhere a little bit more fast paced and dynamic. And that's really our kind of USP in terms of what we're able to offer. Yeah.
And what's the best advice that you've been given on the journey of setting up Boreal?
I mean, I don't think, obviously it all happened quite quickly. So it's not like I was talking to people and saying, hey, how'd you go set up a company?
Yeah.
I think, we obviously, I don't think we could have done this without the sort of 4 partners initially, and then obviously the team who've been instrumental in helping us to get to where we were today. So I think, achieving the growth that we have in the space of a year, you just cannot do on your own. It's just absolutely no way. I think all of us were kind of pushed to our limits to an extent. So I think, relying on high quality people, relying on the team, and using the team to kind of get there. And as partners, we've all got kind of different strengths and weaknesses, the same as the rest of the team at Boreal, and just learning how to leverage those strengths and get people to go do it. Yeah.
I was going to ask you how you balance your work and personal life, but there's probably a blend there.
Yeah, probably. My sort of New Year's thing was maybe to sort of focus a bit more on finding a balance. I mean, but as I said, look, last year was an exceptional year. We set up a company, and we also generated a huge amount of AUM. So you're kind of doing your day job and then your night job's all the sort of establishment of the company and everything else that goes behind it. This year naturally should be a little bit more balanced. Which should be a bit more, I wouldn't say slower. I mean, it's still going to be hard work and there's a long way to go and a lot of capital to deploy in a sort of fast changing environment. So we need to stay nimble and alert to that, and we will. But I think I think all of us are conscious that, we need to find, you need to find a balance. I mean, look, everyone's come from shops like, TPG or VX or, hard driving places. And I think, we are very, very conscious as a company that, we work hard, Monday to Friday, we do work hard, but we're very conscious in not to disturb people at weekends such that it's possible. We're very conscious of people's, health and well-being and have built a lot of our HR policy with that in mind as well, right?
Yeah. So what you've achieved is absolutely unbelievable, given how kind of competitive the landscape is and other people chasing the product. So it's unreal to kind of sit on the sidelines and watch that. And I'm really excited to see what you and the team go on to achieve for this year and the years in the future. As we draw to a close, I ask everyone a question: is if you're given £500 million of equity, who are the people, what property, and which place would you look to deploy that cash?
Highly relevant question.
I kind of feel like it was a question that I dreamt up when I did the podcast. That'd be a really good kind of like question. It's almost like an interview question. If you're given 100 million, where would you deploy it? But having done a few of these, I feel like by going through these conversations, the kind of the question gets answered anyway. Mm-hmm. So that might be the same for you, but you might share something different.
Yeah, I mean, look, it's basically what we were given from Cadillac and is what we are doing at the moment as a business. So I think, I mean, look, we're fortunate we're in a sector. So in terms of sector, for sure, logistics. And I think it would be impossible for me to answer any other way. I mean, look, it's still a growing sector. The fundamentals behind it are still incredibly supportive, and especially given the sort of pricing changes that have kind of started to wash through most markets in the last 6 months. So if you're giving me 500 million, it's logistics, it's pan-European, probably slanting towards urban, maybe. And in terms of what was the other part? The other part, the people. Well, I guess my team and the partners at Boreal, I guess would be
the winning team behind that 500 million quid. Well, look, James, thank you so much for joining me. And like I said, really excited to see what you and the team go on to achieve.
Thank you very much for having me. Pleasure.
Thanks. Thanks for listening to this episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague, subscribe, give us a rating, like or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of which guests you think we should get on the podcast or areas of the market that we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit experienced talent for real estate private equity firms, investment managers, REITs, property companies and advisory firms across the investment, asset management, development, fund management, ESG, cap markets, investor relations and general practice space. So if you're considering your career options at the moment or looking to attract top talent to come and work for you, head over to the website www.rockborn.com where you can find a wealth of resource to aid your search. Have a great day wherever you are, and I look forward to catching you next time.